Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larbi.
Hey, welcome back to another episode of Where Should I Invest? Today is actually Family Day, and I think I've done 4 podcasts today. I try to cram them in, but it is so much fun. I really enjoy them quite a bit. Today's guest I've interviewed is Shane Melanson. He is a commercial developer in Calgary, Alberta. He's completed more than 65 million in real estate projects. He's helping clients as well sell more than $250 million of commercial real estate. He's invested in projects across Canada and the Southwest US. This guy's, amazing, has done a lot when it comes to real estate investing. He works from home, spends time with his wife, Kelly, and his 3 kids. And he's also the host of the Investing Advantage and author of Club Syndication. He wrote a book that's pretty cool. And how I've actually met Shane is through Jay Wong, who hosted a bit of a mastermind dinner and had a bunch of our podcasting people out there. And I met Shane that way. Great guy, super excited to have him on the show. And before we get into that, guys, thank you for those who have left a rating and review. I really, really appreciate that. It's awesome. And if you've sent me an email because maybe you had a question or a comment, I love getting those. Please continue to do so. That is amazing. So guys, I hope you enjoy today's podcast. And if you have any questions at all, let me know. Thanks so much. Shane, welcome to the show. How are you?
Great. Thanks for having me, Sarah.
Good. So I believe it was 3 months ago when we met in person. Jay Wong, a good friend of ours, had a mastermind where he invited other podcasters, but I think also some other people in real estate investing. And that's where we met. So I'm super excited to have you on the show.
Yeah. No, that was a fun night. I think I was the outsider from Calgary, and no, it was great to meet everyone. And I'm really excited about today.
Awesome. So for those of you that may not know you, what is it that you do when it comes to real estate investing?
I guess what I focus on primarily is investing in commercial real estate. And so what that really means is, I've done industrial, retail properties. I've done some apartment buildings, and I'll do ground up development. So I'll buy land and I'll actually construct the buildings, or I'll buy kind of a property that needs some work to it. I started investing in residential real estate. And so I understand, the buy and hold or the buy, fix and flip. And so essentially it's the same kind of model, value add, just applied to larger properties.
Okay. So how did you make the leap from residential to commercial?
Well, I was pretty fortunate. So I was at the city of Calgary in urban planning and the assessment. I got a job at Sun Life Financial doing commercial finance. And so that gave me exposure to what commercial real estate's all about. And there I met my first mentor, and I remember going for lunch with him, Jim, and he essentially kind of showed me the world of commercial real estate, because I was very myopic in terms of just understanding, okay, we meet with someone that's an investor and we lend them money and then they go off and do all these things and then we see them 5 years later type of thing. And so he kind of opened my eyes to what was possible. But it wasn't until I actually met she's now my wife. At the time, obviously, she was my girlfriend. And her father was a big developer and commercial real estate player here in Calgary. And so when he saw what I was doing in residential, he said, look, why don't you come on one of these business trips with me? We went down to Houston and Palm Springs. And it was like, once I saw it, I couldn't go back to doing smaller deals because, when you magnify and are able to kind of do 7- and 8-figure deals, it was just a lot more exciting. So.
Yeah, absolutely. So based on having done both,
Yes.
what is, obviously it's a completely different ballgame, but somebody that's wanting to get into commercial real estate investing, whether it's retail, whether it's multifamily commercial, what are some of the things that they should be aware of making that transition?
I mean, there's certainly a lot of things, right? I mean, it would be, so I've got a gentleman actually not far from where you're at right now, and he's kind of making that transition. He's bought probably half a dozen residential, and now he's going into, he just showed me a mixed use, like literally today at 9:30, we went through his deal. And it's good for me to kind of remember almost, because once you've done something for long enough, and I know you coach real estate investors, once you've been in something long enough, you kind of forget almost what it's like to be brand new to something. And I would say some of the big things are just understanding the game of commercial real estate. In residential, I would say brokers are probably a little bit more helpful in the sense that they're there to kind of guide you. Whereas in commercial real estate, there's usually one agent, and they do, they essentially bridge the deal between a seller and a buyer. And so their job, and the broker's job, because I was one, is very difficult, but they're really not there to kind of make sure you know what you're doing and you know what you're doing. They kind of expect people come with a certain level of sophistication. Obviously the money is much bigger. It's typically, commercial real estate is valued on net operating income, so the revenue, versus residential, which is more a sales-based approach, right? Comparables. In commercial real estate, two buildings side by side can have completely different values. The leases, the tenants, typically it takes much longer. You're 30 to 45 days in due diligence versus maybe 2 weeks in residential. So there's, I mean, I can talk about anything that you wanted specifically, but yeah, there's
the differences for sure.
Yeah. And I don't mean to say, I don't want to discourage anyone. I just, one of the reasons that I do what I do right now is I've seen a lot of people that want to transition into commercial real estate. And if they don't have the proper guidance, I think that if you make a mistake in residential, it can cost you. In commercial, it can wipe you out. And so that's, yeah.
Absolutely. I mean, I feel like there would be bigger rewards, but also higher risks with commercial.
Absolutely. Yeah.
So just out of curiosity, because you've been in this for a while now and you've acquired different types of commercial real estate, the majority of what you buy, where are you finding it?
Do you mean, do I find it off market or cities and all that kind of stuff?
Yeah. So is it from, I mean, I'm guessing it's off of MLS. Like at some point people, no, it's on MLS?
No.
Okay.
Yeah. Now I will say this. Some of the people that I work with are actually finding deals on MLS, but I don't think I've ever found a property on MLS.
Right.
Commercial real estate, like, so to your point, or your question earlier, commercial real estate is very relationship driven. And so the last probably 3 or 4 deals that I can remember just off the top of my head, all came to me direct from brokers. They were not even listed. So usually what happens is, let's say an agent gets a listing or is having a conversation with someone that owns a property. And there's kind of 2 different ways that it can happen. It can either be what's called a pocket listing, where a broker will basically have a relationship with the seller. The seller says, if you bring me a buyer at this price, I'll sell it. So that would be a pocket listing. They don't have an official agreement, but once a buyer comes forward, then there'll be some paperwork that will kind of outline what the fees would be to the broker. The other way will be, it will be an official listing, right? Just like a typical real estate agent. The difference will be, they don't, like in commercial real estate, CB Richard Ellis, Avis & Young, Cushman, Colliers, all the big shops, they're not part of MLS, at least from what, like my experience, that they're not. So they don't post their listings there. It might be on LoopNet or some of these other commercial websites, but 9 times out of 10, if it's a really good property, they've got a database of buyers that they will go to, and you want to be at the very top of that list. And so for the brokers that deal with me, they know that I fit within a very small range, $5 to $15 million value add, Calgary, Edmonton, like this corridor. I'll do development land up to 5 acres, but like there's parameters that they know, and they'll pick up the phone and say, Shane, I think this is for you. I'll look at it, and it's like, send me the CA, which is a confidentiality agreement, sign it. They'll send me what's called a CIM, or basically the complete package on it. and then you just start working on the deal. So that, I know that went fast, but yeah, it doesn't come from MLS, and I don't find them searching online.
No, I mean, I always felt that like by the time it actually hits MLS, because when you look at the MLS results on anything commercial, like by the time you do all the calculations and look at the financials, the stuff that doesn't make sense, in my opinion, probably does end up on MLS, because there's been 20 eyeballs of people that have more experience that have seen it that have probably rejected it. And so the broker decides to put it on MLS maybe as a last resort. I don't know.
Yeah. No, I will say this. If you're in kind of secondary markets, and so Toronto would be a primary, some people would consider Calgary a primary market, but like you start getting into even Hamilton, for example, or some of those kind of secondary markets around, yeah, you'll probably see a lot more commercial real estate on MLS. And I wouldn't necessarily say that those are been picked over. I mean, the one that I looked at today was on MLS. And so I kind of have a prejudice. So I looked at it and I was like, oh, it's probably not a very good deal. And it is overpriced. However, there's a lot of value add. So yeah.
So it could still be an option. But by the time this airs, you'll have made your decision, because it'll be like mid-January.
Yeah, well, exactly. Yeah, we'll know. I'll follow up with you. It's not for me, it's for someone else. So yeah.
Awesome. So you talked about the $5 to $50 million value add. Why that category? Why that range?
Sure. So it's there's a couple of reasons. Number one, I'll call them mom and pop, and none of this is meant to be condescending in any way. It's just the terminology that's used in commercial real estate. So mom and pop is kind of like smaller investors. They'll generally go up to kind of that $5 million range, in my experience. Then you'll have institutional players that are in that 20 million plus, because anything smaller, and it's just, the reality is this, it takes the same amount of time to do a 5 million, 10 million, 1 million, $25 million deal. So they're better off to put their resources behind larger properties. For me, I want less competition. So there's less people that have a skill set to go out and raise $5 million if I'm doing a $15 million deal. And so knowing that, so if it's too small for the big guys and too big for the small guys, then there's only kind of a handful of people that they can really go to, if you will. So that plays into my favor. Does that kind of make sense?
Yeah, no, it completely makes sense. And you mentioned raise money, because a lot of people are like, how do I go from residential into commercial? And, like probably you're not using all of your money, and you've got to find investors to help you to be able to get something at that scale. So how does that work?
Okay, so first of all, this does tie into the previous question, and then I'll answer that. So just remind me if I get off track. But people that are looking to invest in larger deals, they actually prefer bigger deals, right? So I've done smaller ones like $2 and $3 million deals. And the challenge is by the time you go out and raise money from investors, they come in for $50,000 to $100,000. Now that might sound like a lot of money to some people, and maybe to other people it sounds like very little. But if you're going to kind of accredited, sophisticated, high net worth individuals, they don't want to have their money into 10 different deals. They would rather have it in a couple of really strong opportunities. And so it's easier to raise money, in my experience, in those kind of mid-sized deals. And then when you're going out to investors, track record, certainly. When I first started, I was fortunate. My father-in-law, right? He had the reputation and credibility. So I don't want to sit here and say that it was all on me. When I did residential, I had investors that came into my deals, but it was like probably a lot of what is taught broadly in residential, more JVs, right?
Networking, and then that's how you...
Yeah. They might put in half the money and then we kind of split the profits, but in commercial, it's completely different. Like that structure would never fly. Generally, I would say if I'm raising money, I might give a pref or preferred return of anywhere from 6 to 10%, depending on the level of risk. And then there'll be a split on the back end, meaning we may share on the profits 65-35, 70-30. Like there's no one way to do it. It's just track record, experience, how much risk is in the deal. All those things kind of come into play, if you will. But I also get a syndication fee. And so to your question, like I'm putting in maybe between my partner and I will put in 10 to 20% of the equity for these deals. And then the balance we raise from investors.
Okay, so that's interesting. Now, how many investors roughly? I guess it depends on how much money they have, but is there like a minimum where you're like, it doesn't make sense any less than that if that's what you have to be part of this deal?
Yeah, I would say that I try, like, I like to invite people in and I want them to be able to participate. So I would say on the low end, it's probably, I know this is going to go public, but like very few people come in for 50. I would say the majority are in for 100 plus. Okay. And what I would also say is, I think your question was how many? So in some of my deals where they're larger, maybe as many as 20 or 25 investors, uh, you know, because I've been with a lot of these individuals for 10 years now and they've seen the successes and I've paid them a lot of money, it's not a real sales job. Like, of course, I put together proper presentations and some people, like new investors, I sit down with them, but there's a lot that I'll just send text messages and say, hey, I've got a new opportunity. Do you have 10 minutes? We can talk about it over the phone. Because not everybody lives in Calgary, right? I mean, I've got people now calling me in Toronto and Winnipeg and Vancouver. And so, yeah, I mean, it's not always feasible to, most investors don't even know what Zoom is that I deal with. So I wouldn't be doing this. It would be a phone call at best or face-to-face.
Yeah. And I'm guessing that when you return their money, they probably want to reinvest it as well. They probably don't want to have it just sitting there either, right? So you have another deal, they reinvest.
Yeah. And that's always like, that's probably one of the biggest challenges is really finding, like, there's a couple of pillars, if you will, that I kind of call like the kind of a triangle, if you will. So finding deals is that's probably the biggest skill that a person really needs to develop. Because if you don't have the skill to either identify or know what a good deal is, you could be, and I've seen this, where you can be tremendous at raising money, but if you don't understand what a good deal is, you're raising money for crap deals. And that's where people get burned. And I've seen that. And that's one of the reasons I try to educate so that people at least avoid flawed deals from the get-go. And then the last piece, so finding deals, fixing deals, financing and then fixing. So those are kind of the three major pillars, if you will. There's lots that go into that, but.
Absolutely. So now what's the exit strategy with these? Are you paying out the investors after a certain amount of time, and then are you just holding it, or are you selling it, or what's your, I mean, obviously I guess every deal is somewhat different, but just in general, maybe.
Okay. So you asked a really good question there, and I probably differ a lot from most investors, but I don't have any buyout clauses in my limited partnership agreements where if an investor comes into my deal, then we're in it together until the exit. And the reason for that is I just don't feel right. What I've seen other investors do, and it's just not the way I do my business. But let's say they raise money, they add value, then within the first 5 years, they have the ability to buy out. And I just feel that typically you're buying out investors because you want to participate in the upside to continue. And I just don't think that that's, personally, I wouldn't like that if I was on the LP side. So why would I ever do it as a GP? So when you ask about our exits, some of the deals are very defined, right? When we did those industrial condos, I think when we met in Toronto, I had mentioned, so we did 37,000 square feet, small bay industrial condos. The plan was build it, sell it. We were out in 16 months, right? I'm doing this development right now, which is retail, and it will be more like, I don't know, could be a 5-year hold. It'll really depend, or 5 to 10 years. And I've told that to the investors. I said, look, this is going to depend on a few different variables: quality of our tenants, debt we can get, where we are in the market cycle. So if someone comes along and offers us a 5 cap on it, which is a very aggressive price, we'll probably take it. Okay. And, but that's, yeah. So my investors, they rightly or wrongly, they trust my judgment and they know that I'm looking out for them. So
yeah,
some guys like to hold, some like to flip out and do the next deal.
So is it real? Like, it must be really important then that your investors understand that if they need to pull out their money, they're not going to, like, you're probably wanting to make sure that these people, it is not their last $100,000 or $200,000, right?
Well, yes, and yes, exactly. So that, okay, now I remember there was something that you mentioned earlier in terms of how much people come into my deals for. 100%. That is probably, like, I turn away more investors that actually want to put money into my deals because, and I judge them just like they're judging me, right? Or assessing them to make sure they're a good fit, because it is illiquid. And if I raise, say, let's just use $1 million, for example. and some guy puts in 250,000, and then he's going through a divorce or he's whatever, he needs his money. Well, now all of a sudden I'm taking my eye off of developing this property and really making sure that it performs, and focusing on how do I replace this guy, right? Because I'm doing deals constantly, and so I'm like, they know when their money's in there, it's a liquid, and that I've never had anybody come to me and say, Shane, I need my money out.
Yeah, absolutely. That makes sense. I mean, obviously at your scale and the type of investment that you're doing, it's, definitely important that they know that they're in it for the long haul.
I mean, do you raise money with or have partners on your deals?
So I'm still in residential, and because I've been borrowing, I've been able to recycle my money, and I still have
Gotcha.
to do that. But I am actually looking at some potential development stuff, and with some friends. So we are going to be going that route, and we'll be raising money at some point, just because it'll be a good new step into that commercial realm. Yeah.
I think as long as they have the proper expectations is so key, right? If you tell them it's going to be 18 months and then it's a 5-year development, you can imagine that people will probably get a little bit frustrated, right? So.
Yeah, absolutely. And brand reputation, like, to me, that's like number one, like above and beyond money and anything else.
Yeah. Yep.
It takes a while to build and it takes a second to ruin.
Yeah, that's right.
So what is this money exactly? Is this like registered RSPs, tax-free saving accounts, or is it like cash?
So this is typically, none of it's RRSP. I've spoken to securities. I've got a securities lawyer that I'm discussing. When you do RRSPs, and I'm not a lawyer, I'm not an accountant, so whatever I'm saying right now is kind of second, third hand. But typically when you raise money through RRSPs, in my understanding, it needs to come through an OM, or an offering memorandum. And you'll likely also need what's called a private placement, PPM, or something like that. And you need, I believe it's 150 people in order to have it RRSP eligible. And so my deals don't require 150 people. You'll see a lot of funds, and a fund, different what I do. I have a property I show people. A fund is essentially, we're going to go out and find, let's just say, value add multifamily properties in the GTA. Well, that can range from 20 units to 100 units. You know what I mean? And so really an investor is investing in the team versus a property. I've found it much easier to raise money for deals individually. And while I could probably raise more money, because I know some of the doctors I deal with and professionals have RSP that's kind of locked up and they would like to put it in, it's just, and the cost to set that up is like, I mean, I've been told as much as $100,000. Maybe someone will reach out to me and say, Shane, you're wrong, it's 50,000 or whatever, but that's my understanding. And so I just haven't went down that road.
Okay. Yeah, no, that's interesting, because that's all like new to me as well. And thanks for helping clarify some of that stuff. So let's just say, somebody on that's listening, or me, I find this awesome deal, and it's like between like 5 and 15 mil.
Mm-hmm.
Walk me through what I do next from the time I take it, I get it under contract, and now I've got it under contract. How do I raise money? How does that all work and get pieced together?
Yeah, well, I would say if you have not raised money and your first deal is going out looking at, say, a $5 million deal, I would say that you're probably setting yourself up for failure, just being straight up with you. I mean, the truth is you should be building that network of investors well before. So you're talking to them so they know what you're doing, you're educating, you understand. So let's assume you understand how to invest in commercial real estate. You find a deal, because from the time you find a deal to the time that you go unconditional, it's about 30 to 45 days. Now that may sound like a lot of time, but if you got to go out and raise money and you've never done that, and you're trying to do due diligence, and then you've got to line up your mortgage, like, I don't want to overwhelm people, but you would be putting yourself into a position of extreme stress, I would say, because what I've seen people that have never raised money before, they think, okay, well, yeah, like, this person said they're in for 100, but then when they actually go to get the check, that's a different story, right? Because there's no track record. And then all of a sudden they say, well, actually show me the business plan. What's this? What's that? Where's the money going? So, I mean, I could kind of walk you through it, but what I kind of coach people to do is like start building that foundation of understanding. I would probably go after smaller deals, and a lot of it depends on who your network is. For you, you've got a big network. You've got a track record investing in residential real estate. If you come to me and you've never invested before, then you're probably better off to find a deal and bring it to someone and partner up with them that has a track record. It doesn't have to be me. It can be anybody, right? That has a, not anybody, but it has to be someone that knows what they're doing. And just go along for the ride, take a small percentage and learn the deal from the inside. Otherwise, you're going to find it and then probably not do anything with it.
Probably lose it.
It could, yeah. I mean, you're going to spend some money on, like, it frustrates me when people are almost like so cheap that they try to do everything on their own, and they'll I don't know if you ever experienced this, and maybe this is probably like the wrong thing to say. I don't even know if I want to go down this road. But
the podcast, be as open as you want and as honest as you want.
I've just seen where people that are kind of new to commercial real estate, they'll reach out to me and they'll try to get as much kind of free information as possible. And I put a lot out on my podcast, on my book, or whatever. And then I'll kind of watch them and like they're just making like fundamental mistakes right from the get-go. And you can only give someone so much. But as you know, like free information typically doesn't get acted on, I find. And so they'll take a little bit of it and then they go away. But because the process is so long that I think just unfortunately, if you don't, and it doesn't have to be a coach, it could be a good mentor, right? But just find someone that's been down the path. No different than in residential, no different than if you're trying to open up a business. I think if you've got someone that can kind of lead you, it's just going to prevent a lot of mistakes. And so I don't know if I know that kind of got a little bit off topic, but.
No, I mean, at the end of the day, because it's a great idea. If you have a great deal under contract and you don't know what to do next,
yeah,
actually cut someone into the deal that's been doing it that could probably help you raise all the money that you need and go from there. So, and it has to.
Yeah, sir. That's how I got started. I basically was tasked to go out and find, I found probably 100 deals a week. Most of them are junk. I'd sit down with my father-in-law. We would go through them. We would narrow it down. Sometimes it was 10 deals, whatever it happened to be. And then eventually just doing that for years, I would get a small piece and then it just grew over time. Like, I think people that maybe come into it with the mindset of like, I'm just going to make $1 million in 6 months in commercial real estate because the numbers are so big. I mean, some people will do it and those are the stories that people like to talk about. But no one wants to talk about the 3 years that you kind of worked your ass off and made a little bit of money. You know what I mean?
That's it. And I'm thinking like there's something I saw that I don't know so do you invest anywhere in Ontario or is it mostly just Calgary, Edmonton, that area?
Well, we did 1,150 acre development in Muskoka. So we had Bonnie Lake Resort and then Shamrock Bay. We had those two resorts and we've sold out probably 4 years ago now. 15, I guess we sold out. But so I've been out there, but I haven't been back since because it's a long flight.
Not close. So what are your thoughts on, I mean, by the time this airs, it'll be gone anyways, but what's your thoughts on retirements properties? So there's 2 right now on market. In total, they're going for 4.4 mil. Numbers actually look pretty good, but it's a whole business, right? A whole business so I'm just curious, like that concept and that business, like would you do real estate where there's a business attached to it as well, or just real estate on its own?
Well, so your cap rate's going to be much higher because to your point, it is a business. When we bought those resorts, it was a business, it was a development, and it was real estate. We thought I likened it to mobile homes, which is really real estate. But seniors, just like hotels, are a business combined with the real estate. I think, so I would look at the numbers first, right? Like, do you know what the cap rate is or what the NOI is?
Yeah, you know what? I'll send it to you.
Sure. Yeah. So I would look at those numbers first. The biggest question I would ask is, who's my operator and how tied in are they? What I mean by that is, in my experience, if you are reliant on someone else to make you that money, you're in a very vulnerable situation. And so I learned that in Ontario, where, I was very reliant on my sales manager and my salespeople and the operators. But fortunately, one of the operators was a limited partner and had a good amount of money in the deal. And so he wanted to see it successful, and he was instrumental in the deal. So there's lots of different ways that you can kind of think about it and structure it. But I'm always looking at what can what can go wrong in this deal. And with a business like that, if you have no experience running seniors, then who's your operator? And do you have multiple choices, right? If you got to fire someone, can you bring in another operator and pick up where they left off? Yeah, that's how I look at it.
Absolutely. I mean, it's definitely, to me, a good opportunity for the next 30, 40 years as baby boomers are aging, and there's like a shortage of them. So I do have a background in nursing. I did a 4-year Bachelor of Science in nursing. So it's, I mean, I haven't practiced since I left school, but it just came on the market. And my realtor, just for fun, she's like, hey, are you interested in these retirement homes? And I'm like, well, maybe. So it's actually under contract right now for the next couple of days, but I think they're gonna back out, just financing reasons, I believe. But the numbers look pretty good.
Yeah. Well, and here's the thing. I'm not an expert at nursing homes or senior assisted. I know that there's like full service and partial service, and like they have the different kind of levels in terms of how much care. You would know all those kind of details. I would just kind of look into it. And the other thing I would look at is how much new supply is coming on the market, because I think that was a trend in the kind of 05 to 12, 15 even, where you saw a lot of people putting a lot of money into that. And there was a podcast I actually just listened to. I can't remember who it was, but they were talking about kind of a mid-market that is being underserved on seniors. If I can find it, I'll send it to you.
Yeah, I actually had it was Gene and Minnie Guarino recently on my podcast.
Oh, there you go. Yeah, okay.
Phoenix or whatever. They were in the States. I mean, there's definitely some differences, but it's definitely an interesting concept. I'm just trying to think, like, because it's a business, I'll be in this business. It's going to be time consuming too, but no, it's good to talk to somebody that's got, I mean, you've got experience in many, many different types of commercial, and a lot of people think commercial as multifamily residential, but you're like real, like commercial.
Yeah, it's the reason. Look, I love multifamily, and I wish I could probably focus more on multi, but when I see like 4.5 caps, and generally, because there's so much capital chasing so few product, you're just seeing sellers that'll say, well, actually the NOI is this, but we're pricing it off of when you raise the rents. And so like the 4.5 cap is based on a pro forma not even existing. And so it's just so difficult as an investor to make money. I mean, retail's out of favor. If you know what you're doing on industrial, you can do well. Medical office. I mean, I just think that having a more broad skill set, because this is what I do, and I never want to force a deal. So if I want to sit on the sidelines for 3 years until multifamily kind of goes through the cycle, or 10 years, who knows?
Yeah, no, absolutely. Makes sense. Awesome. I mean, I can keep asking you so many questions, and at some point we'll have to potentially get you to come down to the right club and speak, because you got tons of great information there. But the next part of the podcast is our lightning round. So Shane, I'm going to ask you a series of 5 questions. You're going to give me the first that comes to mind. Are you ready?
Yes, I'm ready now.
Right. Question number 1, Shane, what is your favorite real estate investing book ever?
The favorite book would be the one by Robert Kiyosaki. Whatever it's called, Rich Dad Poor Dad.
Yeah. Okay. Yeah. Awesome. What is your favorite podcast?
The favorite podcast that I listen to, I like Mike Dillard, and I like We Study Billionaires. Those are probably the 2 that I listen to the most.
Awesome. I've been actually meaning to listen to the We Study Billionaires. It must be good.
It's really good. Yeah. And you know what? I will say for a long time, I binged on Andy Frisella's MF CEO, but I'm listening to it less and less now.
Awesome. Okay. Number 3, what do you do for fun aside from real estate?
For fun, so in the summer, I love mountain biking and kind of playing with my kids. In the winter, I snowboard, although now my girls are skiing, so my wife's strongly encouraging me to take up skiing. So
Awesome. All right. Number 4, if you lost all of your money and your assets tomorrow, how would you start again?
How would I start again? I would probably, that's a good question. I haven't really thought about it. Okay, well, what I would do is I would go back and I'd probably be selling commercial real estate, and I would start to build up those relationships and connections. I'd launch a podcast. I would really get aggressive on social, because I think that just seeing what it's done in terms of opening up the your reach is incredible. So that's what I would, that's the skill set I have. So that's what I would use.
But you know what, that's a great point. Like, I have people be like, so how do you raise money? Or how do you know, I'm like, I think it's different when you have a podcast, because people come to you and because they hear you, they feel like they know you because they listen to you all the time. So, I mean, you guys, if you're out there and you want to raise money, starting a podcast is actually pretty good, because people get to really feel like they're part of your conversations. And like, I think I get like 3 or 4 per day, people wanting to partner or invest. Or
it's unbelievable, isn't it? I never expected that whatsoever. I had a completely different view of what podcasts would do, but I've had people say, Shane, I binge listened to 20 episodes of your show, and I'd like to talk to you about investing in your next deal, or can I do this? Or, you know what I mean? And I've never met them, but yet they feel that they know me. So yeah. It's huge. I think more people should be doing it.
Absolutely. And it's pretty cool to see how many lives you're touching, right?
Yeah, absolutely.
Awesome. So number 5, last question. If somebody has $50,000 and they want to get started, how would you recommend they spend it?
Well, I mean, if it's their last 50,000, I would probably not go into commercial real estate, frankly. I would likely, I mean, you could, right? I think that, look, part of the reason I'm having a tough time with this is going to sound self-serving, right? But I think that if you build yourself a foundation of understanding and knowing how to find deals, there's a lot of people that think of bird dogs or wholesalers in residential. In commercial, I see guys that are doing 6 figures wholesaling opportunities because they're so good. Now, it doesn't happen overnight. You need to know what to look for. But if you understand that, then that would be one avenue, because 50 grand in a deal is not going to get you very far. But you could tie it up. If you understand how to do the deals, you could do well.
Yeah, you know, I was having a conversation recently with another investor, and he's like, I'm gonna start wholesaling these multifamily deals. Like same thing, right? Like the bigger. So
for sure. Yeah, I mean, if you got a database and you're prepared to pick up the phone and just network with them and find someone that just wants to get out of the deal, and you can match those people. Yeah, you got to be careful if you're just wholesaling. Like, you probably want to put them under contract, not just because otherwise you're viewed as a real estate agent, right?
Yeah, no, exactly. You got to get them under contract, and then you got to get the ball rolling, because it costs a lot of more money to get that rolling than residential.
Yeah.
Awesome. So that was the lightning round. So Shane, if the listeners wanted to reach out and know more, where can they go?
Probably the best is just my website, Shane Melanson, MELANSON.com. There you can find my all the stuff, my book, my videos, podcast, all that stuff.
All right. And what's your podcast called?
It's called The Investing Advantage.
All right. Awesome. On iTunes?
It's on iTunes and Stitcher, and I'm not a podcast guy, probably a bunch of other places, maybe like Google Play or whatever it's called. But yeah, I think it's on all those.
Very cool. And what's your book called?
It's called Club Syndication, How the Wealthy Raise Money and Invest in Commercial Real Estate.
All right. Awesome. And is that on Amazon?
You can get on Amazon, or you could even just go to clubsyndication.com and just download a free PDF. Or you can pay whatever it is, like $7 on Amazon. So one or the other.
Okay, that's great. Any final last words of advice?
You know, I think the only advice would be just to I've learned from my mistakes. And I think the more you can listen to podcasts like this, other shows on investing, reading books, just really educating yourself. Like I see people jumping in too quickly. And I think I've made that mistake. And so if I can help someone avoid it, that would be my biggest thing. Because if I could take back the 3 investments that I wished I'd never made, I would, I'd have a much nicer office to do this in.
All I see is a gray wall, but I'm sure.
Yeah, you can. Yeah, it's a nice office. I know. I just kind of set this up as a
Nice as a backdrop. Nice. Well, thank you so much, Shane, for all of your knowledge and sharing. And I'm really looking forward to connecting and potentially having you out to our club or a webinar in the future. And thank you very much for your time.
Okay. Thank you, Sarah.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larbi. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?